Videos being live streamed. Got it. What do I do when I send a dispute notice and they didn't respond back in a timely manner? Want to buy a home, but I still have collections. Give me 1 second. Let me get this thing set up over here. Hold on. What's up? If you guys are watching this on the YouTube, fast forward about 5 minutes. That's when the video will start, or you can click down in the description and you'll see when this thing actually starts. So I'm just kind of getting things set up right now, but I'll be with you good folks in a bit. So I'm just dropping the link right now in my first time homebuyer community. I'll get to your question in a second. I just got to get everything set up over here. Internet, let's move with some speed. Tonight's credit webinar. All right, going to post that thing there. All right. More events. You need rich friends. So if you drop the question, I'll try to get to it in a second. Also, you should join on YouTube. It's hard for me to find the questions once they pass my line of sight on Instagram. Add your own link. Okay, so I dropped the link there. Okay, cool. About to go live on YouTube in about 3 minutes. 3 minutes. Countdown to whatever we count down to on YouTube. All right. Okay, cool. So I got that there. What the heck is going on here? Okay, so I see myself on YouTube. Let me update this description. Any single ladies, all right. I guess make a match in the comment section. Your videos. About to go live on YouTube and going live on YouTube in about 3 minutes. 3 minutes. So we're going to be covering a bunch of stuff during this webinar. If you're watching this on time delay, just go in the future about 2 or 3 minutes and you'll see where the presentation starts. Okay, going to be breaking down all this from the perspective of what an underwriter looks for on your credit report, because that is very different than a lot of stuff that you see on these streets. First time home buyer school credit tips. All right, what we got there? We got that link there. I got to put my description in the Zoom caption. So this is part of a series of First Time Homebuyer School. It's my Facebook group. You can click the link in the description. It gives you kind of a link to there, and also there is like a wherever YouTube links are, there's a link to that as well. So you can check that out there as well. Show more. So about to go live on YouTube in about 2 minutes. I'm almost finished with this setup, and I'll try to get to the questions that were asked they were asked already. What are we doing? Entertainment. Let's change this to an education topic. All right, so let me save that. Okay, cool. About to go live in about 1 minute on YouTube. You should join on YouTube. Let's see. We got that set up there. Okay, let's go. What was the thing taking all day to save? All right. Oh, you're welcome. You're welcome. All right. So, okay, cool. So I'm about to start promptly at 8 o'clock. All right. Okay. So if you want to join the presentation, like I said, join on YouTube. It's kind of weird to watch a presentation on IG Live. You can click the link in my bio. Or I guess you can just watch me talk about this stuff. All right, so, okay, cool. Okay, so it's 8 o'clock, about to get things kicked off. Where are my slides at? Let me see what everything looks like. All right. Okay, cool. So, hey, thank you all for joining me, and congrats to yourself for actually joining this webinar, whether you're watching it in real time or time delay. Just before we get started, like I cannot see your comments. I'll try to check in to see if there are comments like every maybe 15 to 20 minutes, but I can't see your comments. So I'm going to go through the presentation, and then I'll answer questions at the end, which makes more sense anyways than me stopping and pausing everywhere. So mortgage specific DIY credit repair, part of First Time Home Buyer School series. Click the link in the description to join First Time Home Buyer School. It's free. It's a community to talk to other people going through the home buying process like you. So it's live. It's 9 p.m. Eastern Standard Time. So let's get into it. So who am I? I'm your instructor. So my name is David. I'm from DC, like the actual city. I live now in Texas, about 30 minutes north of Dallas, or maybe about 35 minutes, 40 minutes, depending on what the traffic is. I spent 6 years in the Navy. I have a degree in economics. I graduated from the United States Naval Academy. Hence the 6 years in the Navy. And I have 6, maybe 7 years right now experience as I think I have 7 years of experience right now as a lender and underwriter. And I like to point that out because I'm going to go over like the practical real world applications of credit. Like I said, there's book knowledge. Like when I say knowledge, I use it very loosely. There's book knowledge and there's the actual real world application. Because a lot of stuff I see online are folks talking about the theory of credit, but a lot of it doesn't actually apply to real life. So I want to be able to separate like the platinum from the white gold, or the white gold from actually the silver, really. I'm a world-class Connect 4 player, just FYI. And I'll tell my collection story maybe at the end of this, because I think this webinar may go long. There are a lot of slides, so I'm not going to get right into that at the moment. All right. Hold a second. Let me move my thing out of the way. Sorry. Move your face out of the way. All right, cool. Yeah, we got 48 slides. So I'm going to go through this. I'm not going to tell my story. All right. So I always say this, can you do me a favor? Like you say, if you get value out of this, if you think it's garbage, hey, don't do anything with it. If you get value out of this, share it with a friend, like the video. That helps the content get out to more people. And you're saying, like, what is the importance of that to you? So the more the content gets out to more people, the more often I'll do stuff like this, because I'm like, oh, people like this, because it makes YouTube push it out to more people. Then I'll put out more content for you guys. That's how it works. I put out good content, you like it, you share it with a friend. YouTube shares it with more friends, and I do more webinars and stuff like this for the good people that watch my channel. So big shout out to you, whether you're watching this on time delay or real life delay. Same thing, sphere of influence. And I would say join my First Time Home Buyer School to continue the conversation, so you can kind of interact with people going through the same process as you are, right? And so you kind of have conversations on this, whether it's credit, the home buying process, and kind of bounce your ideas off of folks. So like I said, I think you guys follow me, which way you came to this webinar, but it's cool to talk to other people, because everything I put out is just from my perspective. All perspectives matter. And so why am I doing this? One, like I said, I see just a lot of nonsense and erroneous information online, whether it's people doing it on purpose or just taking advantage of people's lack of knowledge. I don't really differentiate, because bad information is bad information. But I just see a lot of bogus information. I know it's bogus because, once again, I know how credit works, like in the real world practical experience. And once again, I want to help you guys get prepared for whatever happens at the end of this housing decline, whether you erroneously think the housing market is going to crash and it's going to be like 2008. It's not, seen my previous videos for that. But the home prices are declining. But I want you to be prepared, so there's like no excuses once this thing is over, whatever you define as this thing. And so, yeah, we're going to eliminate excuses, because like folks are waiting for home prices to go back down to like pre-pandemic. But I'm like, you didn't buy a home pre-pandemic anyway, so like what was the issue? And then once again, just people regurgitating nonsense. I see a lot of that on these IG and TikTok streets, even YouTube. And so I took a poll for people that signed up for this webinar. And so I started to write these down, but it was the same answer. Like, why are folks looking to improve their credit, right? So one is to purchase a home. That was the number one. Looking to buy a house, want to refinance, and then people just want purchase a home, purchase a home, purchase a home, purchase a home. That's why people are looking to work on their credit. And some people are like, I'm tired of my character being defamed, which I think is important as well, because a lot of times people associate bad credit with poor financial habits or people being irresponsible. Honestly, sometimes I do that myself. But stuff comes up. So people want to make sure that they're not being talked about negatively when it comes to their credit, which is super important. Well, great things happen when you get credit, home ownership, when you get credit cards, and want to work on your business and personal credit are kind of the reason that folks wanted to improve their credit. All right, so what do we cover in this webinar? We're going to cover one, like what is credit to begin with, who and what laws govern the industry. We're going to go over budgeting, which is super important. We're going to go over the minimum credit requirements. We're going to go over credit monitoring. We're going to go over how to read your credit report, disputing what you probably came for, and products to help you, and some support as well. So first off, what is not true when it comes to credit, right? So any timeline guarantee that anyone gives you when it comes to credit repair process, if they guarantee you any sort of timeline, they're bogus. Just go on to the next person. Once again, I have no beef with people that do credit repair. I have beef with the bogus folks. Paying someone for credit repair is not a negative thing. You're just paying somebody something for a service like you would with any other thing, right? I mean, people pay for Uber, people pay for all types of services. And so credit repair is one of the services that folks pay for. All right, and so I'm going to read this. This is directly from the Fair Credit Reporting Act. It says, consumer reporting agencies must correct or delete inaccurate, incomplete, or unverifiable information. Inaccurate, incomplete, or unverifiable information must be removed or corrected, usually within 30 days. However, a consumer reporting agency may continue to report information if it has verified as accurate. So what does that mean to you? It means that no one can guarantee any timeline. It says right there in writing that they have up to 30 days to respond. So I see people talking about 14 days, 28 days, all this other stuff. Literally, no one can guarantee you a single result in under 30 days, because by law, even if it's not yours, the debt collectors don't have to respond within 30 days. So let's talk through this, right? So someone says you, hey, I can get this item removed from your credit report in less than 30 days. So day one, you pay the money, you give them information, they consult with you. We'll go over what they actually do to consult with you. That consultation process probably takes 2 or 3 days, right? And then so we're on day 3. Then they mail the letter out to the person, which takes another 2 or 3 days as well. So we're already at day 6. They have 30 days to respond. So we could be at day 36 potentially. They could respond on day 37. It gets back in the mail. We're on day 40, and they could play the okey doke with you and kind of give you the runaround until you tap out. That's a lot of times what these debt collectors do. They just help you tap out, and they'll say it's verified the first time around. But long story short, no one can guarantee you any timeline. Inquiry removals are a joke. I'm going to go over in this very webinar how to remove inquiries for free. But inquiries, honestly, they don't matter at all. In 7 years in the mortgage industry, I've not seen a single person denied credit or mortgage ever due to inquiries. It's not a thing. Inquiries are only 55 of the 850 points that make up your credit score. And they don't even matter after 3 months, but we'll get to that later. And once again, any guarantees is bogus. Once again, stuff can only be removed if it's inaccurate, incomplete, or unverifiable. So if you were late on your credit card payment, or if you had something go to collection because you didn't pay something, and the debt collector has all the information that you signed, there's nothing any credit repair person can do to get that removed, and it's reporting 100%. Repeat, there is literally nothing any credit repair person in the world can do to get that removed, because there's no magic algorithm, magic formula, or any magic anything that any credit repair person has. It has to be inaccurate, incomplete, unverifiable. That is it. End of story. That is all. That's the only way stuff gets removed. So no one can guarantee you any sort of removal. They're just lying to you to get their money. So I would head the other way. Does anybody know who this guy is right there? All right. So we're going to go over what is credit first off. So it's just the ability for somebody to obtain a good or services before payment based on the trust that they'll pay it back in the future. It's hey, I'll get you back. And so credit in the real world is your reputation. Is okay, this is a good person. I know they're their word. If I give them $20 now, because maybe they left their wallet, I know they give me $20 when they get back to the house. So their reputation is credit in that scenario. But in this real world, credit comes with interest. So I like to give out this scenario, right? Let's say you have 4 friends. Oh yeah, so the 4 friends left their wallet and they all agree to pay you back in 3 days when you meet up. For whatever reason, you have friends that leave their wallet behind. And so imagine these 4 friends, like the first one just pays you back the next day, you don't even ask. The second one pays you back, on day 3, like they were supposed to. The third one pays you back like 7 days late. So after day 3, but you didn't have to bring it up to them. They got you back 7 days, although late. And then the fourth one is like, hey, they only pay you back like 2 weeks later. And that's after your friends have to like track them down and like beg them to pay the money. Like, who in that scenario, like, would you let borrow money, right, in the future? Probably not person 4, right? Probably, maybe person 3, but probably not, but definitely persons 1 and 2. Persons 1 or 2 are credit. Basically, credit is a what have you done for me lately system, right? And so you could be friend 1 for 7 years in a row, but if you do a friend 4 move, like, your credit is ruined. That's just how it works. And why? Because the people that get paid off of credit are the ones that make the rules in the industry. Whoops, we jumped a little far too ahead. So what is going on slide? So I got some itchy fingers over here. And so as I kind of mentioned, it's like, hey, it's basically what have you done for me lately when it comes to credit? Like, who are you likely to lend money to in the future, right? And so I want you to understand this credit cycle though, right? Because it's super important to understand, because you don't want to be scared to actually like dispute. Sometimes people are scared to dispute stuff or say stuff's not theirs because they think it's not as unbecoming or something like that. But no, dispute stuff if you're not sure it's yours, right? Because here's the cycle. Here's how credit works. So you go to the bank, right? And the bank lends you money. They actually lend you someone else's money. It's not even theirs. They lend you money based on an interest rate, based on your credit score, right? That's how you get lent money from the bank. And so when I'm saying the bank or any lender, and so if you don't pay that back, right, they'll try to track you down for about 6 months, and it goes off to a debt collector. And then so what does the debt collector do? In order to assure that you pay the debt back, they put your information on the credit report and send it off to the credit bureaus, Equifax, TransUnion, and Experian, right? But how do they get it on there, right? They have to pay the credit bureaus. Like, the credit bureaus are just private companies. They're not government organizations. They're just private companies. They're for-profit companies that make money off of selling your information, once again, back to the banks, right? Who based your lendability off the information that they sold to the debt collector, who the debt collector sold your information to the credit bureaus. It's just this cycle that continues. They're all like in cahoots. They're all in bed with each other. So don't be afraid to dispute or anything that's on your credit report, right? Because like I said, it's all a cycle. They can't live without each other. Like, the banks are useless without the debt collectors are useless without the credit bureaus are useless without the other ones. So they just sell your stuff off to the highest bidder. That's why you get all like these free things in the mail, right? And so what is your credit report? I think you've all seen the chart that's on the right, but I like to say, look at credit from the perspective on the left. And I think it gives you a lot better perspective of like how credit works. So you have 850 points in your FICO score, right? But if you have a credit profile for like 6 months, you start off with a baseline score of 300. Just you have 300 points when it comes to your credit report. 1 second. You have just basically 300 points when it comes to your credit report, right? And so when we're talking about these percentages, we're just focusing on the 350 points when it comes to your credit score. Excuse me. And then so when we break down these other parts, we look at payment history. It is 192.5 points when it comes to your credit score. We're talking about utilization. It is 165 points of your credit score. We're talking about length of credit history, 82.5 points. New credit, 55 points. And credit mix is 55 points as well. So what is new credit? Once again, new credit are inquiries. Once again, they don't really matter. 55 points out of this whole thing is new credit. And so once again, I think inquiries are such a big topic when it comes to the credit repair industry, is because they're super easy to remove. Once again, I'll go over how to remove them at some point in this presentation. But here's the thing. If you go to any if you go to like any website, if you go to Equifax and Union, Experian, the Consumer Financial Protection Bureau, it'll tell you this: credit inquiries for stuff like a mortgage, car, or even a student loan, all within the same, it says on there the 45-day time span, count as one hit. So what does that mean to you? So when you see people doing these posts where it's like, hey, don't go to the car dealership and let the dealer run your credit 10 times. It doesn't matter if they run it 10 times because one inquiry counts the same as 10 inquiries. The reason people focus on inquiries when it comes to credit repair, because they're super easy to remove. But here's the thing. Let's say you got 10 inquiries in your credit report and your credit professional is like, oh, I'm going to do some magic for you. And they get 8 of those inquiries removed. So you still have 2 left. They did absolutely nothing for your credit report because once again, one inquiry counts the same as 10. It counts the same as 2. So whether that 10 inquiries goes down to 7, 5, 4, or 2, or even 1, nothing actually happened. Nothing happened to improve your credit. So don't let folks fool you when it comes to the inquiry game. But like they're super easy to remove. So it looks like folks are doing something because it's like, oh, look at your new credit profile. You have 10 less inquiries in your credit report. So now you can pay me another $150 again next month to for me to move some other inquiries or whatever like nonsense folks are talking about, right? So this is kind of like a breakdown of how your credit score works, your credit profile works. And so I got 2 charts for you right here. So first off, I'm actually about to go to the comment section in a second. So real quick, I want you guys to look at these charts, the one on the top and the one on the bottom. And I want you to tell me what you think those 2 charts are of. They're the same time frame, but take a guess at what the top chart is and what the bottom chart is and drop your response in the comments. And so I'll take a look at that when I get through this in a second. And so minimum credit requirements, it's super important to know your minimum credit requirements for a major reason. The major reason is the factors, external factors, have a much bigger impact on your interest rate than anything you can control yourself. External factors have a way bigger impact on your credit score, on your interest rate than your credit score does, than the loan type, than pretty much anything does. The external factors have the biggest impact on your credit score. That's why when you look back in the days at some charts and it's like, hey, well, back in the day, a mortgage for me was 11% interest. I did this with my dad. One of their loans was like, I think it was like 10% sometime in the 90s for a home, right? And it wasn't because my dad had my parents had bad credit. It was because that's just what the interest rates were at the time. I went back and looked at the chart and I was like, oh, the average interest rate was like 10 and change. It's like, oh, you just kind of got what the average rate was at the time. Not because you had good or bad credit. That's just what the rates were at the time. And so we'll get into how they get to those rates. So once again, drop what you think those 2 charts are. Maybe somebody get a prize if they can guess what they are. And then so if we're looking at the loan types, we'll look at the loan types. Let's talk about NACA. There's no minimum credit requirement, but you still do need to have a good credit profile. I have a longer video on my YouTube channel. It's called like NACA Just the Facts. VA and USDA loan, technically there's actually no minimum credit score when it comes to VA and USDA loans, but you're probably going to be at like a 620. Lenders are going to put overlays on top of those and say, hey, you probably need about a 620 credit score if you want to run with us when it comes to that. A conventional loan, the minimum credit score is 3%. It is 3%. It is 3%. For some reason, there's still this people running around thinking that 5% is the minimum credit requirement for a conventional loan. It is not. And then there is the FHA loan, which is 3.5%. All right, so let me see what's going on. Hopefully, I don't know if anyone's even looking at this. Well, let's see what's going on in the comment section. Did I get any guesses? All right, so okay, so we got mortgage rates. As far as that. All right. Okay. So we got more. Okay, so we got mortgage rates. Okay, so what these charts actually are the top one. The top chart right here is the federal fund rate, which is the cost to borrow money. And so when you hear about the Federal Reserve actually raising the interest rates, this is what the Federal Reserve is raising, is this top chart right here. So as you can see, interest rates were so low the last 2 years because the cost to borrow money was less than 5%, right? And so that in this chart on the bottom are the actual interest rates. So if you look like November, you see how rates are low, 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 November up to March. And so a couple things I want you to take from this chart. This interest rate chart starts to jump up before the Fed actually raises the rates because lenders know these rate hikes are coming because the Federal Reserve actually announces them to the public. Folks just don't ever pay attention. For instance, the Federal Reserve is actually going to raise rates 50 basis points and 75 basis points later this year. Spoiler alert, rates are going up again. And so you can kind of see when the Fed raises the cost to borrow money, interest rates go up. So if you had a 620 credit score back like in February, you probably would have got like a 3-something% interest rate. But if you waited to get your credit, in order, and it took you to like June or July, like you'd probably be at like a 5% interest rate, then, and then now you'd be at like a 6 or 7% interest rate. So that's one reason why you need to always kind of encourage folks to, if you got the minimum credit score, just go ahead and apply. Like no need to wait till you have 740 credit, because you may end up taking an L like folks probably did waiting to get that 740 800 credit score, right? All right, so what laws actually govern the credit industry, right? Like what laws govern this industry? So the FTC, the Federal Trade Commission, they govern the consumer reporting agencies, which are like Equifax, TransUnion, and Experian. And so the guidelines for credit repair are in the Fair Credit Reporting Act. It's a 115-page document. I've looked over it. I've not read the whole thing. A lot of it is just like kind of like legalese, but there's about 8 pages that really matter when it comes to credit repair. And so I'll tell you, I skimmed through the whole thing. I did not read the whole thing. I guarantee you most folks have not even cracked open the Fair Credit Reporting Act. It's 115 pages. So, all right, so we're going to get into some credit stuff, which you probably were waiting for. That's kind of some background information. All right, so other important docs are the Fair Debt Collection Practices Act. We'll get into that, the Fair Credit Bill, and the Statute of Limitations. So these 5 states were actually the states where the most people that signed up for this webinar were from. And so you need to know like what the actual like statute are for certain things. So there's like oral agreements, which is just like, hey, can you pay me some money back? And so depending on what state, like oral agreements, they're voided after a certain period of time. In Cali, it's 2 years. In New York, it's 6 years. It's good for an oral agreement, but good luck trying to prove an oral agreement in the first place. So written agreements and statutes are there. Once again, if you're in Illinois, it's 10 years. A promissory note is like a mortgage or a student loan or something like that. So those can be voided after like 10 years, meaning that no debt collector can require you to pay those after those timeframes. So stuff drops off your credit report, we'll get in like 7 years typically, but this is how long until a debt collector can actually collect on that debt. And this is important because like promissory notes, like in Cali, the statute is 4 years, but it may be in your credit report for 7 years. So someone could be calling you like, year 5, year 6 to get you to pay a debt, but they legally can't collect it, right? And so like if you're going to court or for some reason you're being sued for a collection, it's important to know these statutes because I don't think it's the judge's responsibility to point out that they're within the statute of limitations or not. It's actually your responsibility to point that out to the law. And then open things are like credit cards and stuff like that. They actually there's like a statute, but they essentially stay open forever because you have a credit card is kind of always open. And so those are the state statutes. These are the federal statutes, which is the stuff that gets reported on your credit report. So open accounts, once again, they stay open forever. Paid as agreed, you got 10 years. Late payments, charge off, foreclosure, short sales, 7 years. Inquiries, they stay in your credit report for 10 years, but they don't really matter after like about 3 months. Collection, 7 years, plus 180 days, because they have to wait 6 months in order for you to in order to start sending it to collection in the first place. You got to give you opportunity to like speak up and say whether the debt is yours. So don't ignore debt collectors, and we'll go over that as well in this presentation. Bankruptcies take 10 years, but a Chapter 13 is 7 years. Tax liens, 7 years. Judgment, 7 years. But honestly, they'll stay there forever. if they aren't paid, like the tax liens, like they're not just going to go away. Anything that involves the government or going into a court, like it's staying on there forever. The government's not going to forget that you owe a tax lien. They're just going to keep refreshing the lien. And once again, if you owe money, you owe money forever. If you own property, they may file a lien against your house. And so those things have to be sold or have to be satisfied, like if you refinance or go to sell your home. So if you own property and you have a lien, it will be paid one way or the other, unless you just decide to die in the home. And I guess the lien goes down to gets passed on to the young kids. So, or hopefully old kids, I guess, at that point. And so just real quick, in case you weren't aware, starting in 2023, medical collections trade lines of less than $500 will no longer be reported on consumer credit report. So if you got any medical debt that's less than $500, I guess you don't need to pay it off. There may be like debt collection companies trying to like call you like to get this debt paid before it just drops off the credit report. So watch out for that. There may be folks being like, hey, I know you owe $500, but we'll take $50 to get it removed from your credit report. And so it's going to go to zero in a bit, I think in like summer of 2023. But also the other side of that coin is, let's say you do have medical debt on your credit report that's less than $500 and it's impacting your credit score. There may be opportunity for you to have the upper hand now to negotiate with these debt collectors, right? Because you're like, okay, I got a $450 collection. Hey, Mr. Debt Collector, I could either just wait about 6 months for it to fall off, or I'll give you $50 for it. And so they may take it. So it's now the ball's in your court to lowball the debt collector if you really need to get it off your credit report, because it's dragging down your credit score when applying for like a home loan. So just so you know, like medical debt impacts your credit report when it comes to the home buying process, but it's often overlooked. So like a lot of times you can have like a large medical debt in your credit report and it won't really impact your ability to qualify for a loan, because from a lending perspective, like folks understand is like, it's different to have like a $3,000 medical bill where it's like, oh, I don't know, I broke my leg and I had to go to the hospital. And they you like say, I have to get a splint on my leg. Then they present you the bill after the fact, and it's like, okay, I can't afford $3,000. That's different than you buying like a I don't know, a $3,000 chain and not paying back Leroy's gold and silver for the chain. Those are two different things. So if you have debt over $1,000, that is a lot of times a hard stop in the mortgage process for a lot of lenders, unless it's a medical debt. Lenders really don't care about that. And so another thing when it comes to debt collectors, you got to figure out if they're licensed in the first place. So if you're in these states, Cali, Georgia, Iowa, Kansas, Kentucky, Montana, Oklahoma, Pennsylvania, or South Carolina, your debt collectors don't need to be licensed. But everywhere else, your debt collector has to actually be licensed in the state. So you may be dealing with a debt collector calling you from, you're in Texas, they may be calling you from Oklahoma, right on the Texas border. But if they're in Oklahoma, they can't collect any debt from you for anything that went down in Texas. And so right here, like on the Texas Secretary of State website, they actually have a whatever you call this, a data entry form where you can actually put in your debt collector's information to determine if they're even licensed in the first place. And so you'd have to find like whatever the equivalent version is for whatever state that you're in, right? And so after I go through this, I'm going to start answering some questions if there's anything in the chat. So you can drop some questions. I'll take kind of like a quick interlude to answer questions for folks. But let's talk about the Fair Debt Collection Practices Act. This is basically the laws that govern debt collectors, right? Because a lot of those dudes are wild and out of control, and their whole thing is to get money from you. That's their job, is to collect debts, right? And so you have to know your rights as a consumer. So a lot of times folks are under the impression that like debt collectors, that they're like the government, or they can do this and that. They're just, once again, they're just a private company. Like, think of your debt collector as like Target, right? And whenever you're talking to a debt collector, say this, like, could Target do this to me? And so we'll go over all of these scenarios, but whenever you're thinking like if a debt collector is wilding or acting out of control, think about, could Target say what the debt collector is saying to me, or could Target do what the debt collector is doing to me? If the answer is no, the debt collector probably can't do it. So once again, if you owe Target money, could Target discuss your debt with just a random person? Like, could they discuss the debt with your neighbor? No, they couldn't. So your debt collector cannot either. Can they harass a debt collector over and over again to find information? Target cannot. So Target wouldn't do this at all, but a debt collector can actually call them once to find information about you, but they can't keep calling like your friend or like even your fiance, or they can't keep calling other people in order to find out your whereabouts. They get one shot to do that, right? They can't call before 8 a.m. or 9 p.m. local. So they have to respect your boundaries. They can't be calling you super late to keep you up at night. They can't be calling you early at the morning. These are local times, right? And so they cannot call your place of work if you've notified them not to call. So like they can call your place of work once, but once they're told not to call your place of work ever again, they cannot do it ever again. And so for each violation of this that a debt collector makes, you can actually sue them for like $1,000. So I always say if they're violating anything that I'm mentioning right here, congrats to you, and make sure that you're recording it so you can get your $1,000 from them. And so you can do two things. You can let them know that they're in violation of the Fair Debt Collection Practice Act and quote, say Act 15 USC 1692, so they know that you know what's going on. And you can kind of say, hey, you can either like release my debt or we can go to court. Like, what do you want to do with this? And so if they know they're in violation, that may be the easier thing, is just to have them release your debt. But hey, feel free to have your day in court as well. That's your prerogative. And they cannot contact the consumer if you advise the debt collector in writing to cease communication. So if you contact them in writing and say, don't contact me, they can only contact you back in writing from then on. So that's another thing to do to avoid the phone calls, is to actually pick up the phone and talk to the debt collector. But be careful with what you say, because like I said, they're trained to actually, get you to say stuff to kind of admit the debt is yours. Because if you're like refusing to pay, that could be like a indication of guilt, because like you wouldn't refuse to pay something that wasn't yours. It's like if someone like knocked on the door and was like, hey, I don't know, you owe me $100. I wouldn't be like, I refuse to pay. I'd be like, what are you talking about? Like, that's not, I don't actually, I probably wouldn't open the door, but you'd be like, what are you talking about? Like, no, like you'd be like, hey, I don't know what you're talking about. You wouldn't refuse to pay. Like refusing to pay is like, hey, this is mine, but I'm not going to pay you, right? And so some more things. They cannot use harassing, abusive, or oppressive conduct or profane language. Once again, can anybody from Target call you and start like wilding out on the phone and threaten you and doing all this stuff? They can't threaten violence or, once again, criminal activity. They can't say they're going to call the police or anything like that due to your debt. Like they have no authority to do any of that stuff. They have the authority to take you to court, but they can't like call the police or anything like that, or threaten you. Once again, they cannot put your information on blast. They can't put it on Facebook, or they can't blast you. They can't say, hey, I'm gonna post your information all around town, or defame your name, or post your name all on these internet streets. Once again, they can't keep calling you and calling you and calling you and calling you, repeatedly blowing up your phone because you don't pick up the phone. And they can't fake like who they are. Like they have to identify themselves on the phone. So like I remember, years back, like when I had like a debt collector contacting me for a debt. And I remember like, they'll call and they'll be like, hey, can I speak to David? I'll be like, who's calling? They'll be like, can I speak to David? I'm like, who's calling? Like, you called me. And so they have to, and I didn't know all these guidelines here, but I just don't talk to people on the phone if they don't identify themselves first. I'm like, you called me. And so eventually they'll be like, oh, I can't identify what's going on if I don't confirm who you are. And I'm just like, hey, you can either confirm who you are, or we can just end this conversation. So they have to confirm who they are on the phone. They can't just keep playing these dumb games as far as when it comes to credit. And so I'll go a little bit more into this scenario. But I can't even remember what the debt was for. And so I was just like, okay, I remember the debt was mine. I can't remember what it's for. So when the person called me, I was like, yeah, I do remember that medical bill. Yeah, ironically, a medical bill that I didn't pay. And I think it was like $300, right? And so here's the thing. Like, if you do have some sort of debt collectors, they buy your debt for like pennies on the dollar, right? So if you have like a $300, because most people don't pay the debt. So if you have a $300 debt, they may have paid like $30 for that debt, right? So before I even offered to negotiate with the guy, he was like, I'll give you 30% off the debt. And I was like, okay. And I pulled out my credit card and like paid it over the phone. But that's another thing. Like the debt collectors, typically whatever your debt is, if you want to pay it off, they will they would pay it off for like less than what's actually the debt is. Once again, they bought the debt for pennies on the dollar. But the thing I didn't do was I did not ask them for a pay for delete, because I didn't even understand how like the whole credit thing worked. I didn't even know it was on my credit report. And so make sure you're asking for like a pay for delete as well. Because if they're not going to delete the collection, it doesn't, there's literally no point in paying it, because it does not improve your credit profile at all. It just actually refreshes an old debt. And sometimes it may make your credit worse, because if we go back to the statute of limitations, so you go from having like a $300 debt that's like 5 years old to a $0 debt that's 1 day old. That $0 1 day old debt has a bigger impact in your credit report than the 5-year-old $300 debt. Because once again, credit is a what have you done for me lately situation. And once again, they can't make any false, deceptive, or misleading statements. All right, so let me see if we got any questions in this chat box. All right. I was trying to learn kid, baby, some mortgage rates, how low could late payments be? I have a company with late payments, 7 years is still in my file. Okay. What is a good time to buy a house? Market is bad. Okay, so I'll get into those. So I'll cover those questions once we get into the webinar, because they'll be covered actually in the webinar itself. Okay, so you need a budget. So once again, all the credit repair in the world can't do anything for you, like if you don't have a budget, right? Because let's say you get everything cleaned off your credit report and everything is somehow erroneous, it gets removed from your credit report. If you have not improved the habits that got you the bad credit in the first place, you're going right back when you started, right? So think about this, like utilization is 30% of your credit score, 165 points, right? And so if like you're maxing out your credit cards, you're doing all this other stuff, like it's going to be very, very, very hard for you to get good credit, because one, your utilization once again is 165 points. But if your credit cards are maxed out, that's when you may hit like life may hit, and you may hit a situation where you have like a major bill that comes up. And then if you're living like kind of like paycheck to paycheck, now you have to decide, of course, do I eat or do I pay this debt? And of course you're going to eat, or feed your kids or take care of your living expense. And that's how people kind of like fall behind, and a lot of this debt happens, right? And so once again, you need to have a budget. This is kind of an old webinar. I think it says a $1 planners in my bio. If you're my first time homebuyer community, I've actually posted the budgeting guide for free in there. I'll repost it tomorrow. But if you join the first time homebuyer community, the budget guide is in there for free. I don't have it in my bio anymore. And so there's really only a couple ways to increase your credit utilization, right? One is to pay down debts, right? Which is easier said than done, right? And then the other thing is to ask for a credit line increase. And so if your credit cards are maxed out, you may have trouble getting a credit line increase. But let's say your balance is like, I don't know, let's say if a credit card that has like a $5,000 limit on it, and you typically carry like a $2,500 balance, so you're at like a 50% utilization. And let's say you call the credit card company and they're like, okay, we'll raise your limit to $7,500. You didn't really do anything different on your end, but now you're at 33% utilization. So there's a chance that you can just call the company and ask for a credit increase. And so some companies will do like a credit increase without even pulling your credit, because they kind of soft pull and monitor your credit, right? And then another way is to actually obtain more credit. I guess I have some, like, if you're really interested in that, I have like some guaranteed approval credit cards. But these are like, I always say, these are like training credit cards, because they have like annual fees and stuff like that. I want to be very upfront about that. But they are like guarantee approval credit cards, and that can also help you increase your utilization as well, which may help to improve your credit and eventually help you graduate to like a big boy or real credit increase limit, like with like your local bank or credit union. So, but if you do need that, you can hit me up, email me, or I guess drop a comment. But my email will be in the description. And then so credit monitoring. I think credit monitoring is important, especially if you're going through the credit repair process, because you want to know like what's happening in real time when it comes to your credit, right? So you you fixing up all your credit, but then there being like bogus stuff on your credit report when you go to apply for a mortgage, that doesn't do you any good. And so I'll tell my credit story real quick that I did not tell at the intro. So about 2017, when I bought the home that I'm living in right now, I'd always been, this is before I entered the mortgage industry, I'd always been monitoring like my credit on my credit card, my credit card app. And I was like, okay, I have it. It says an 800 credit score. That makes a lot of sense to me because I've literally never missed a bill in my life, right? I guess I had that one collection that I didn't know about, but I paid that off, and I guess it was paid for delete. But I've never like been late on a bill in my life because my perception of credit is just like, hey, you pay your bills on time, that you have a good credit score. So I was like, okay, this 800 credit score makes a lot of sense on my banking app. And so when I went to go get a mortgage, my lender pulled my actually I got 2 mortgages at that point actually, but or 3. Anyways, so when I went to go get this mortgage, my lender pulled my credit and it was like everything was all good. And I was like, okay. I was like, but what's my credit score? Like, because your lender, I always ask your lender your credit score. I don't know. Some lenders just don't say what it is for whatever reason. They're just like, hey, this person got approved. That's all I care about. But always ask your lender what your credit score is, because that's like your true credit score. Like your mortgage credit score is the most thorough credit score you have, right? So if a lender says you have they're going to give you 3 scores, and let's say you have a 720, a 750, and a 720. Like that 720 is going to be the lowest credit score you see anywhere on any type of credit model. But anyways, I was like, hey, what is my credit score? And he was like, oh, you got I think he just told me my middle credit score, and it was like you have a 680 something. I was like, why is my credit score so low? Because I was like, the banking app is telling me I have like a 800 something. And I was like, huh. And he was like, oh, he showed me my credit report, and it was like, there was like this collection on there. And I was like, what is this collection? And so I ended up just calling up. Once again, I didn't know anything about credit or how collections worked. And so I called up it was $75, and I was in the midst of the mortgage process. So I called him up and I was like, hey, you saying I owe $75? Like, what is this? And they said some bogus stuff, but I was like, man, I'm right in the midst of the mortgage process. And I was like, hey, let me just pay this off so my credit score will go back up. And so I paid off the $75 collection. Once again, I did not even know to ask about to pay for delete. They actually deleted the thing from my credit report. And then when my credit recycled in 30 days, because it doesn't happen instantaneously, when it's cycled in 30 days, because these companies report to the bureaus like once a month. So it could take 1 day for your credit to cycle, or it could take 30 days, depending on like what point that they actually report the debt. And so when my credit got run again, my credit score actually went back up to an 804. So like that $75 collection, it actually dropped my credit score 120 points because it was actually only 3 months old. So that shows you how recency can actually kill your credit score. So it's important to know what's going on. And so, like I said, you can monitor your credit yourself as well, like annualcreditreport.com. I think they still have it where you can get your credit report like once a week or once a month for free. And so it won't tell you your score on annualcreditreport.com. But the important thing is it will show you what's on your credit report, meaning that it'll show you any derogatory items in your credit report, which is really the important thing. The score doesn't really matter that much. Because like if you're looking at your banking app and your banking app's like, hey, I have a 780 credit score. And then you go to annualcreditreport.com and you pull your credit report and it's like, okay, there's no derogatory items in my credit report. That 780 is probably accurate. But if it's showing a 780 and then you go to annualcreditreport.com and it's showing like a collection or something like that, you're like, oh, this 780 credit score probably is not correct. And just from my experience of seeing folks talk about their credit, right? Typically, folks overestimate their credit score by about 40 to 60 points, just FYI, when they're using like whatever app. Just it's very rare that anybody tells me what their actual credit score is. But there's 2 dates you really need to know when it comes to your credit, right? You need to know your due date. And so this is the last day to make a minimum payment on your credit card before you incur a late fee or penalty. And so, being 30 days late could impact your credit score. This impacts your payment history, which is that 35% of your credit score, aka 192.5 points. And so, what if you can't pay by the due date? Like, what do you do? Just do this. Literally call your credit card company or whoever and say, hey, I'm experiencing financial hardship. Can you move the due date back, 14 days, 21 days? They'll say 1 or 2 things. They'll say yes, or they'll say no. If they say no, hey, you're going to be late anyways. At least you try it. But a lot of times they'll move it back because here's the thing. They want to make money off of the interest. They want you to actually end up paying the stuff and for you not to just to walk away and for debts to go to collection. Because right, if we go back, let's say you have like $1,000 in debt and you can't pay it, and you're incurring late fees and all this, and you walk away from $1,000 in debt. Now your company is selling that $1,000 in debt off to a debt collector for like, I don't know, $100 or $200. They rather work with you to at least make a late payment, but not dock you with it, and just keep collecting that interest in perpetuity, right? And so that's what you're like your debt collector. A lot of times, well, not debt collector, like your credit card companies, these guys will actually work with you in order to actually move back payment dates. But you got to pick up the phone and ask, right? And so the other important thing is your statement close date. This is the date your balance or utilization is reported to the bureaus. This is super important because a lot of times, and I would do this myself, I would pay off like my stuff like a few days before the due date. It's like, hey, and honestly, I didn't know what my due date was. I think it's like the end of the month. So like if my due date of my credit card was like, no, I think it's the 7th actually. If it was like the 7th, I just pay everything off on the 1st. But here's the thing. Once again, the agencies report your utilization to the bureaus 1 day a year. So let's picture this scenario. Let's say your due date is the 20th. And so you're like, hey, I'm going to be good with my debt and pay off everything by the 15th. But if your statement close date is on the 10th, and let's walk this scenario. You have a $5,000 balance on your credit card or utilization on your credit card. You carry a $4,000 balance, but you pay it off all on the 15th. So statement date 10th, you pay it off on the 15th. Your due date is on the 20th. If on the 10th your balance is $4,000, on the 10th your balance is $4,000. That's the day they report the information off to the credit bureau. So as far as Equifax, TransUnion, and Experian is concerned, you have an 80% utilization. If you then pay off that debt on the 15th and your balance is zero, it doesn't matter because your utilization was reported on the 10th, right? And then you're good for the due date, but that statement close date is what matters when it comes to utilization, which once again is 30% of your credit score or 165 points. So knowing that statement date is super, super, super important. All right. All right, so if a debt collector calls, what do? This is exactly what you do. You pick up the phone, right? And tell them, whether you're doing this or not, just tell them you're recording the phone call and say that they're harassing you. Whether you feel harassed or not, just say they're harassing you, because that's like a trigger word for the debt collectors to know that, okay, harassing can mean we could get fined. Because remember we talked about the Fair Debt Collection Practice Act? And so be like, hey, and whether you've done this or not, be like, hey, you've officially requested via mail that all phone calls stop. And ask them, hey, did you get that letter I sent you? Whether you sent it or not, just say that you sent the letter, right? Oh, excuse me, sorry about that. And to tell them you want all official correspondence to be sent to the address that you have on file. Excuse me. And lastly, ask them again for their address over the phone. Because once again, remember, we want to verify that they're actually licensed in the state that are trying to collect the debt. So once again, you want to go to like your Secretary of State website or wherever this information is at. Excuse me. And you want to actually ask them, are they licensed? Well, you're not asking, you want to actually put the information there and determine if they're even licensed to collect the debt in your area. Because if they're not licensed, they're collecting the debt illegally and they can be sued. They definitely can't collect it. You may be able to actually sue them as well for being bogus and trying to collect the debt when they have no authorization to actually collect the debt. So there's a little trick of the trade for you when it comes to like the debt collector stuff, right? All right, and so we're going to go over how to actually read a credit report. We're actually going to go over my actual credit report, right? So you can kind of see what I'm up to as far as my credit profile. And so we're going to go over two scenarios. One, we're going to go over like the paid credit monitoring, which I'm going to show you like what it looks like with Identity IQ. And so that's a lot more user friendly, and it involves like the credit monitoring. If you're interested in that, I have a link where I can get it to you for like $1. You can get it for like $1. It's like a $1 trial period. So what you do is you just go on there and you get all the information and just set an alarm and make sure you like cancel the subscription like on day 5 or 6, whenever you're done with it, but before day 7. Or once again, you can go to nalcreditreport.com. It's a little bit clunkier, and it reports all the bureaus individually. And once again, I'll show you what each of them look like so you can kind of make an informed decision. All right, so let's go and see what this looks like. Okay. Okay, got one more slide before we get to my credit report. And so once again, knowing is half the battle. So like I said, the first step when it comes to credit or credit repair is to make sure that the information on your credit report is accurate in the first place. Because there is a pretty high chance that you have some inaccurate information on your credit report. And you'll see when we go over my actual credit report. And so right here, here's a snapshot of identity IQ, right? And so here's an example of a debt that is actually helping somebody on, but the information is not identifiable here. And so if you can see this, we got 3 columns: TransUnion, Experian, and Equifax, right? And so this is all the same debt. And so you want to basically, this is how debt collector, or this is how credit repair people get stuff removed from your credit report. Remember, it has to be inaccurate, unidentifiable, or one more thing, I forgot the other thing. But you want to make sure that that all this is accurate. So like, let's walk through this exact credit report, and I'll tell you what a credit repair person will look at and how they would get stuff removed from your credit report. So first thing they're going to do is look over like your account number. And so those asterisks, they don't really matter. They're allowed to put asterisks on there. It's actually to help with your personal information. And so we're like, okay, it's a revolving debt. This is worded different, but it's like, it's a secure credit card. That's accurate. And so, or maybe it's not accurate. You want to make sure that you have, this is what the 3 bureaus are reporting, but you also want to make sure that you have what, like your actual information for that account reporting as well. I don't know why I got like the hiccups. I don't know what is going on with me. Sorry for that if that's coming across in your end. My apologies. And so you want to have the actual information for the account in one hand, and then while you're going over this credit report, so let's go down it. And we're like, okay, it's a individual thing. It's a derogatory event, of course. Monthly payments, you've made no payments. All right, so now we found our first inaccuracy, right? And so TransUnion is reporting that the account was open on 7/24. The other 2 bureaus are reporting it was open on 7/01. So you know right now, either TransUnion is wrong, or Experian or Equifax is wrong, or maybe all 3 are wrong. But you know there's at least 1 inaccuracy, maybe 2 already on your credit profile. So you make a note and be like, okay, you're writing all this stuff down. You're like, okay, I know this is inaccurate, because that's one of the ways you get stuff removed from your credit report is inaccurate. And so, but let's keep going and see what else is on this credit profile. And so I say, okay, we're all reporting the same balance, number of months. Okay, boom, let's look right here. So now we're like, hey, the high credit limit is different on all these the high credit limit is different on 2 of these accounts. So once again, we can look at this and know either it's reporting inaccurately to Experian, or it's reporting inaccurately to TransUnion and Equifax. So if we're recapping, and we're going to assume for purpose of this evolution that the bureau that has that is the one-off bureau is inaccurate, right? So we know, going back up here, that TransUnion has an error reporting for this account, and now we know that Experian has an error reporting for this account. So right now we have enough information to get this debt removed from the TransUnion column and the Experian column. And let's keep going. So now, and this is actual real life scenario, right? And so let's look at this credit limit. We got credit limit 1,000, credit limit 1,000. Experian Equifax is saying that this credit limit is 0. So what do you know? We're going to assume for purpose of this evolution that these 2 are right, but Experian is wrong. So now we know that we have at least 1 piece of data reported inaccurately from Equifax right here. We got 1 piece of data reporting inaccurately from Experian, and we got 1 piece of data reporting inaccurately from TransUnion. So this is an account that you can get removed from your credit report. And that's all you had to do. Like literally what I just did is all you have to do to get stuff removed from your credit report. Once again, I didn't do any secret tricks. I don't have some machine that read this. I don't have an algorithm. I didn't use super cool wording. But that's what you need to use in order to get the stuff removed from your credit report. And we can just keep going, right? And once again, this is a real life like example. And so right here, date last reported. Once again, we got an inaccuracy with Equifax there. Charge off as a loss, that's the same thing there. Once again, date of last activity. They all three got different dates of last activity. And then date of last payment is inaccurate there. So just looking over, and so they won't all be this like blatantly bad, but just looking over this scenario right here, like we found like 5 or 6 errors just on this credit report here. And that's why I think it's cool to use the Identity IQ version, because it puts everything side by side, so it's easily to look over. So and whether you want to go long term, like I said, to me it may be worth like the monthly subscription. Just if you're actively working on your credit, you're actively working on your credit over the course of a couple months. It's typically, it'll take you a couple months in order to actually to run through this. And one thing you folks don't realize, so when you're paying somebody like $150 or whatever for credit repair, they'll make you buy this credit monitoring anyway, so that they can actually log into your account and check the stuff for you. So when someone charges you like $150 for credit repair, it's $150 plus you have to pay for the subscription anyway. So you might as well give it a couple rounds yourself to see what you can do on your own, right? All right, so we're about to run through my credit report. I'm going to run through my credit report, and I'll show you what it looks like on annualcreditreport.com. And so when you're examining a credit report, I like to say you want to get like 3 different markers, right? You want to get a red one. And so for the red marker, or you can get whatever colors you want and make them whatever you want to do. But for the red markers, you want to be like, hey, for the red stuff, these are things that I know are errors. I know that for one, that they're inaccurate, just like we identified on the previous report. You want to highlight everything red. Yellow, you want to be like, I don't know if this is my debt or not. I don't know what's going on. I'm not quite sure. You want to identify the yellow. And then the blue stuff, if you're like, okay, I 100% know this is my debt and all the stuff is there, you want to just highlight it blue so that one, you can identify everything that's on your credit report, right? But here's the thing. If you're looking at your credit report when it's all said and done and there's a bunch of blue on it, the issue is you, not the inaccurate credit bureaus, right? You just got to come to that realization with yourself. It's like, hey, I do a bad job in managing my credit because there's a bunch of blue in there, but at least you'll stay on there and you can kind of, you can at least have a heart to heart with yourself that you know you need to do a little bit more when it comes to actually working on your credit, right? And so if it's a lot of red, a lot of red and yellow, hopefully on your credit report, but you want to grab 3 markers when you're doing this. All right, so let's run through my credit report. And so the first thing you always want to do when it comes to working on your credit report is to make sure that your personal information is accurate. Because here's the thing, a lot of stuff goes to collection. Why? A lot of times because you don't even know that it was a debt that was outstanding. And so I always like to give this example, which I think a lot of folks have actually run into. And my wife is like a benefits genius, guru, benefits queen. And so she's able to help me with a lot of this stuff. But typically what happens with a lot of medical debt is this. Let's say you go to the dentist, right? And you go to check out, you're like, hey, do I owe anything? They're like, no, well, I don't think so. We'll talk to your insurance. And then they talk to your insurance. And here's the thing. The vast majority of these people, like these medical people, billing people, they don't know what they're doing. Trust me. My wife, I don't even go to the doctor that much, but my wife identifies probably like 2 or 3 errors, medical billing errors on me a year. Once again, I go to the doctor for my normal checkups. I go to the dentist normally. I don't go to the doctor a lot at all, but like 2 or 3 times a year, she'll find something bogus between my and her medical stuff. So that stuff is wrong a lot. But here's what happens. Like you go to the dentist, they contact the insurance company, and the insurance company's like, oh no, it will only cover 80% of this. So now the patient, you may owe like $80, right? And so they mail you the $80 bill in the mail. And you may be like me, we don't check your mail a lot, or you may have just like moved to another apartment. You may have gone to another place of residence. Like they send the bill, they send it to your old address. The new person there, just maybe they give it to the post office, maybe they throw it away, but you never got that medical debt in the first place. And so now what happens is 6 months pass, and then it's just a collection on your credit report. And once again, I give the example of the medical debt because a lot of times it is incorrect. Like I said, you you'd be surprised like how often medical stuff is incorrect. And like I said, I only know this is incorrect because my wife is like a literal benefit. She's a genius when it comes to that stuff. And so like she'll call folks and she's correcting medical billing stuff all the time with these people. Like I can't tell you how often this stuff is wrong. If you've never caught a medical error, if you never noticed a medical error on your medical billing, it's just because you don't know what you're looking at. It's there all the time. But so let's say that this medical bill was bogus, like it may be. That's why you want to dispute it, because you didn't have the opportunity to actually debate the bill in real time. And so we'll get into how you actually dispute it and you actually get the information that you need from the debt collector in order to figure out whether it's your debt or not. But an easy way to just eliminate it all together is to get rid of a lot of old names and addresses, right? Because once again, if they send it to an old address and that debt is associated with an old address, when you get that old address removed from your credit profile, that debt collector can no longer link that bill to you, because it's like, oh, Sam Washington in Dallas owes this debt, but there's a bunch of Sam Washingtons in Dallas, so how do they know it's yours? They don't, because that address that was originally on your credit report is no longer associated with you. Hopefully that makes sense. That's why you want to, the first thing you want to do when doing credit repair is remove old and bogus information. And this way you should always start on credit repair yourself, because if you're paying somebody $150 a month or $99 a month, right? For you to tell them what your personal information is, like you could just do this stuff for yourself. Like at least do the light lifting yourself, which is updating the personal information on your credit profile. Don't pay anybody for the first month. You're paying them $150 and they're just getting a copy of your driver's license and your W-2 to verify your information and send it off to the credit bureaus. Like that's a waste of $150 for you. That's a couple stamps and maybe, what was that? And maybe like I don't know, 10, 15 minutes of your time, right? And so, all right, so let's jump into my credit report. As you can see, I pulled this from annualcreditreport.com. You can see the thing right there, and it's just my Experian profile, right? So let's get into it. Oh, and so as you can see in my personal information, I had 7 names. I had 18 addresses, 2 employers, and 3 other records. And so, yeah, I had my credit pulled in a while. This is from last year when I actually pulled my credit report. It's still all good though to this day. To this day. All right, and so once again, when I pulled my credit report, it had 1, 2, 3, 4. So it had 7 different names in my credit report. Only got 1 name, but once again, so your debt may be. Let's say my middle name is I want to say my real. Let's say my middle name is Jack, right? My name is David Jack Smith, right? And so if there's like a credit report where it says like David, I guess Jackie is short for Jackson, but it's like David Jack-o'-lantern Smith or something like that is on one of the bills. And like if there's a debt that says David Jack-o'-lantern Smith and my middle name is Jackson, not Jack-o'-lantern, like once I get that inaccurate name removed from my credit report, once again, that debt associated with the credit report is gone to the wayside as well. So you only got 1 name unless you're like Jason Bourne or somebody like that. You should only have 1 name on your credit report because you're just you. And so get all that bogus stuff off there. And once again, I gave you the example with the addresses, right? And so only addresses from the last 2 years should be on your credit report. And so like for me in this situation, I've lived at the same home for the last 5 years. So 17 of those 18 addresses are erroneous, right? That were on my credit report. I had 17 different addresses. And I'm trying to think, I'm not even, some of those I actually lived at, and some of those are properties that I own. But yeah, it's only have the address you actually lived at the last 2 years. Cause like you own a rental property, like there's no reason for that address to be on your credit report because you're not getting any mail or anything there, right? All right, so that's the first step in the credit repair is addressing the erroneous personal information, right? And so, okay, this is out of order. I want to get back to my credit report. I guess I threw this in the middle. And so, when you're disputing, like whether what's what in your credit report, you need 1 item to validate your addresses, right? Such as like a driver's license, a utility bill, or any of these. You can take a picture of this. Or you can just watch it on time delay and look at this again. But I'll give you a couple of seconds to take out your phone if you want to take a picture of this. But like I said, this is going to be on YouTube for you to watch again as well. And you need one item to validate who you are as a person. Once again, these are the items you can use to validate yourself as a person. All right, so we'll get to like the letters and all that stuff as well. And so how do you read a credit report? So we're back. And so you want to make sure your date of birth is correct. Honestly, I don't know about this phone number thing because I don't really want nobody calling me, but I guess you can update your phone number if you so fancy on your credit report. It doesn't really impact your credit score or anything like that. And then so once again, the same thing we did with the identity IQ, you want to do the exact same thing with the items on your credit report on annualcreditreport.com. And so once again, there's only one bureau that you can pull at a time. Or excuse me, it's only one bureau on a piece of paper when you're dealing with annualcreditreport.com. So you want to you'll have like 3 sheets of paper out in front of you, and you're going to be going and verifying the exact same thing that we talked about with the identity IQ scenario. All right, so then there's also public records which are listed on your credit report. And so public records would be like, bankruptcies, tax liens, judgments, and stuff like that. And so real quick, when we're talking about public records, so once again, public records is not something that your credit repair person, or you, if you do it correctly, can get stuff removed from your credit report, right? But they're not removed from public record, right? I want to make that 100% clear, because I think that's something that often gets lost in translation, that people don't understand when they're talking about credit repair. They're like, hey, I can remove a bankruptcy, foreclosures, and all that. Yeah, you may be able to get it removed from the credit report due to a technicality, but you cannot get it removed from public record. That is not a thing that exists. So let's say you have a tax lien, and for whatever reason, the date is wrong. Like the day is off by like a day on your credit report. You can get, and somehow you get that removed, that tax lien removed from credit report. Great for you. But what happens is your underwriter runs a separate report in addition to your credit report, right? Once again, these are $1 million companies, sometimes $1 billion companies. Do you think that they're going to overlook bankruptcies, foreclosures, and stuff like that because your friend Chris, who does credit repair on the side, and you paid $150, got this thing removed on technicality? They're all of a sudden, they're not going to be it's just going to be gone forever. No, what happens is I'm not going to say the report because I don't want folks engaging in fraud, but your underwriter goes to a website and they pull the information that's pertaining to you, and it shows all this public record stuff. And so what happens is, like, you think you got this foreclosure or tax lien removed or whatever removed from your credit report, and then you're merrily running along, you're looking at houses and you're putting down earnest money, you're doing inspections. And then once you get to the underwriting process, you already paid all this money. The underwriter's like, Chris has a $19,000 tax lien against him, or Chris had a bankruptcy actually 3 years ago. And I'm looking at the record right here in the court system. I need Chris to prove to me that this bankruptcy is not his. And a response that is not in my credit report is not going to fly, because the underwriter is looking right at the document. So you have to prove that somehow that actual document is erroneous. And so not what was reported on the credit report, but the actual document that was filed with the Dallas court systems. You have to now prove that document itself is fraudulent. Or not fraudulent, is inaccurate, which is a whole nother process that is not possible to do, because your signature is probably on it and your address is probably on it and it's notarized, and your address matches the date on the address matches the date of your of when you lived during that time frame, because the underwriter is they're able to pull where you've lived like the last 7 years as well. So long story short, public records are just there. You got to deal with it. Be upfront with your lender about it, because different lenders have different statutes on when, like how long a bankruptcy matters. Because a lot of lenders, their hard stop is like, hey, if you have a bankruptcy within 4 years, you just can't apply with this no matter what. Some lenders have like graded scales when it comes to bankruptcies. Like a lender may be, okay, if you had a bankruptcy 2 years ago or 3 years ago, and it was due to a extenuating circumstances, okay, we can deal with that, but you need to have proof of that. Or it'll be 3 years, but if it was just due to financial mismanagement, it'll be like 8 years. So there was a lender I was at where they had like the tiered process for bankruptcy, and I was able to prove that one of my clients had actual extenuating circumstances, and we're able to get like the lower bankruptcy requirement in that scenario. But so in that scenario, it's like a shorter statute, but you do have to put down like a larger down payment still. But we're able to work that out because they were upfront with me about their financial situation, and we're able to actually find like a news article that proved that that client's point. Hard inquiries, I've kind of touched on that a little bit, but they only stay in your credit report for like 2 years, and honestly, once again, they don't really matter at all after about 3 months. All right. Well, it's 9 o'clock. This thing's going long. Okay, I'm almost done here. Sheesh, this is a long presentation. And then once again, this is just experience and stuff going over my credit reports there. All right, so we're finally to the disputing process. All right, so once again, these are the addresses for you to send the dispute letters to if you so fancy. And so some folks will be like, hey, should I freeze stuff from my credit report? Honestly, it doesn't matter. Freezing doesn't do what folks think it's going to do. You may be able to freeze stuff to get it removed from your credit report, right? But what happens is your lender's just going to be like, okay, I see you frozen these secondary bureaus, or you frozen this or that. If you want to get a loan with us, you got to unfreeze it. And so you just have to unfreeze it, and then these bureaus will just re-report the information back into your credit report. So freezing doesn't do what people actually think it does. Once again, all freezing does is make your credit report look pretty for the time being. All right, so once again, if we're disputing, make sure we're not messing with anything near the statute of limitations, right? Because, and also remember that because negative items have history too. So if you have like a negative item that's been in your credit report for like 6 years, and you get it removed, you actually lose the history with that negative item as well, and it's not impacting you negatively at all really after that 2-year mark. And so once again, this is a quick snapshot of the letter you want to use when you're disputing stuff when it comes to your credit report. So don't copy this verbatim, because this is actually a generic template, and because what happens is these are all scanned by a machine, right? And so if a machine is scanning like a credit report, and everyone's credit report says, I understand that mistakes happen, but your inaccurate information could hurt me in the future and cost me my job, dream job, house, car, force me to pay our interest rate, blah, blah, blah. They're going to be like, okay, this is just like, they may flag it as frivolous because everyone's just kind of copying and pasting the same kind of bogus thing when it comes to the credit report. And I guess if you join my first homebuyer community, I'll actually have some, I think I'll drop a few letters in there if you ask me to, when it comes to actually dealing with credit, right? And so there's different templates for like each scenario when it comes to credit. But I didn't realize I've been talking this long, so I'm going to go a little bit quicker. And so if the collection is falling behind, so what is collection? Something that's basically been falling behind, and you need to, and it's been sent off to a debt collector, right? And so when you're disputing stuff, make sure you're tracking what you're disputing and what has been verified, right? And so you want to make sure that, so this is like a quick snapshot of what you're doing when you're splitting information. You're basically making sure that, one, you're sending off like a debt validation letter to the debt collector, right? You want to send it off via certified mail, because you want to send it off via certified mail so that you know the timeline that it was sent to the debt collector, right? Because by law, the debt collector has 30 days to respond to your request for validation of the debt. Because remember, the debt collector called us and we said that, okay, we'll send you a letter asking for you to stop communicating with us over the phone and to actually validate the debt. So we sent that letter, and now they should be sending you back information to validate what the debt is like. And them just saying, hey, we validated the debt is not validating that. They have to actually send you like the documents they've used to verify that the information is yours. Because once again, we're going back to like the medical collection letter. You have the right to actually challenge what that information is on your credit report. And so you want to make sure that like the account numbers match what's in like the system. You want to make sure that it's your signature and stuff on anything that you sign. So you want to make sure all that is accurate. So what happens is you send off that letter to the debt collection company. You want to wait maybe about 4 or 5 days. Then you send off a letter to whatever bureaus are reporting that information as well. And so once again, we've already kind of identified what is inaccurate. And so I'll have like a debt collection template letter for you. And so you want to send it off to those credit bureaus and be like, hey, Jim's collection company is reporting this collection with I don't know, with the Red Cup agency. They're reporting it as inaccurate. Could you please remove it from my credit report? And so what happens now is the credit bureaus will also send a letter off to Jim's collection agency, asking them to validate the debt with them as well. So you're hitting Jim with the debt validation letter, and you're also making sure that the credit bureaus are actually trying to validate that debt as well. Because once again, Jim just paid to get that information on the credit report. That's all they did. The Experian, Equifax, and TransUnion is that actually verifying the debt that Jim paid them to put on the credit report, unless you actually make them do it with that debt validation letter. And so as I kind of mentioned, you want to send it, once again, they have 30 days to respond. And once again, you want to send that letter via certified mail. So you kind of read this and pause it. Like I said, I didn't realize I've been going so long, so I'm going to zoom through these last things to see if folks are still here and want to ask questions, right? And so what happens after 30 days after they respond? So if it comes back as, it'll probably come back as verified, just because the debt collectors, first off, are just going to try to get you to kind of like tap out and say the debt is, and say, okay, they validated the debt. This person doesn't really know that we don't have to just say it's validated. We have to provide information. They may just say it's yours. And then you got to go kind of back and forth with them. Once again, you got to ask them to actually validate the debt. So if you go back and forth with them a couple of times, maybe eventually they'll be like, hey, we don't have the information. We don't have the actual information, and we'll delete the debt. Or you want to go back to the credit bureaus again, and once again, they should be providing the credit bureaus the stuff to validate the debt as well. That's why you go to the credit bureaus as well as the debt collectors. They can kind of ignore you, but they're not going to ignore the debt collectors. And if they don't respond at all, you can actually get it removed by like an admission of silence, and also report them to like the Consumer Financial FCPB, as far as the Consumer Financial Protections Bureau, as well as saying that this debt collector is not abiding by the Fair Credit Reporting Act, right? And so what if the collection agency doesn't respond? And so what if actually the credit bureau doesn't respond within 30 days? They probably won't. They're super backed up ever since COVID. I think they're responding to like less than like 5% of requests. So you'll have to reach out to them a couple of times. Once again, which is why you want to kind of start this process on your own first before you pay somebody else, because you don't want to be paying somebody $150 a month for them to get ignored by the collection agencies when you could just get ignored by the collection agencies. So a lot of things are going pretty slow right now. And once again, inquiries have the least impact on your credit as anything. So here's how to actually get an inquiry removed from your credit report. Just so let's say you have an inquiry or a credit report with Bob's Credit Union. Just call Bob's Credit Union and say, hey, there is an inquiry on my credit report. I did not authorize this inquiry. Can you please remove it? And so one or two things will happen. They'll either say, yes, we'll remove it, or they'll say no. If they say yes, they remove it, great. If they say no, you want to ask them to send you the information they have to verify that the collection is yours. And so, right, they will either send you information that shows it's yours. And so they'll send you some information. So you want to look at this information and say, hey, I did not sign this. I did not authorize this. There's nothing that you sent me that verifies that this collection is mine. So, please remove it from my credit report. And if they don't do it, that's when you go to the credit bureaus. Or the other thing that may happen is they may send you the authorization that you provided to have the credit inquiry, which means that the credit inquiry is yours, right? So there's nothing you can do to get it removed. But a lot of times they'll just remove it via phone call. That's the easiest way to get a inquiry removed, just to call the actual person that put the inquiry on your credit report, because it's easier for them to remove it from your credit report than to actually go through the whole process where they're having people, they have a whole department and they're fighting inquiries and all this stuff. It's just a waste of their time. So a lot of times they'll just remove it via a simple phone call. So there you go. You saved yourself $20 paying somebody for an inquiry removal kit. All right, so we're at the end of this webinar. I didn't realize it was going to take this long, but there's some information, especially if you're still with me. It's time to actually execute on this information, right? So what you want to do is you want to execute on the stuff I say. Maybe watch this webinar another time. I would say I would encourage you to join First Time Homebuyer School to continue the conversation. I got the $1 credit reports. If you want that, just send me a DM. If you know me from, you probably know me from IG. Send me a DM, and I can provide you that, or you can email me at my email is in the description to this live, but it's like hello@thehouserichshow.com. So ignore these 3 bullet points. They don't actually, or actually, yeah, but yeah, grab the DIY credit course. I don't actually do the Zoom calls anymore. Sorry about that. But you can join the Facebook group and you get like 100 dispute letters. And if you want to grab that or any of my products, use promo code FTHB, which means first time home buyer, and you can get 35% off any of the products that I have. So I'll leave that code up. Today is what, Thursday? I'll leave it up through like through Friday. Actually, for folks that are watching this on delay, I'll leave this code up through Sunday. So I'll leave it up. If you're watching this after Sunday at midnight, the promo code no longer works. So that was a long presentation. So let's see who's actually still watching this thing, man. Sheesh. All right. So I'm at the end of it. If you guys got questions, drop them now. That was going on for a long time. Just drop an X if you have a question coming, so I know if something's coming. If not, I'm going to log out of this thing. So I'm going to just go over these questions I got in the chat right now. Are you welcome? After paying a charge off, can you still request a creditor to remove it from the files? So you can't really pay off a charge off. Like a charge off means that the debt collector is actually like charged off it's actually like charged it off. So charge offs are super hard to get removed, to be honest with you. And so it may be a charge off and a collection. So the collection can be removed, but like a charge off means that like, hey, you had like a car loan with Chase, and they just like, hey, Jim's not going to pay back this car loan. We're just going to write it off for tax purposes. And so that's kind of how the charge off works. When's a good time to buy a house? I'm hearing the market is bad and not to do it. I'll say check out my page. I literally have done like 5. I think I've done like 4 topics on what's going on with the housing market. And so just look at my live videos and view one of those videos as far as what I think about the housing market. But if someone says it's a bad time, ask them what information they're actually using to source their opinion. Typically, their opinion is based on nothing but reading headlines. But I heard someone say it's always a good time to buy real estate if you don't own anything. So you can't do anything with what's going on with the interest rate. You just got to kind of deal with that as well. Should I pay debts that are in collection? I can't tell you that to pay or not pay any debts that are in a collection. I can tell you don't pay a debt if there's not a pay for delete in place, because you're just kind of wasting your time when it comes to that. Learning about 7-day change of please. Okay, cool. I think that's it for questions. I appreciate you guys watching. Feel free to throw a like down in the video if you got any value out of that. So if you got any questions, I'll give it another 10 seconds. Drop an X if you have a question. I'm going to go through what's on IG. I can't go through all these questions. When you got no money to get the bus, but charge. Well, you should be more like your brother. I'm not sure what that means. Okay, cool. Well, appreciate you all joining me. I'm about to log out in about 5 seconds. So if you got questions, drop an X. But 5, 4, 3, 2, 1. All right, I am out of here. Thank you.